Welcome to another episode here. So I hope everybody's having an awesome day today. So in today's video, we're going to be talking about the Dow Jones, kind of what it is, why it's down, what's going on in the stock market. All right. So, if you guys just look up Dow Jones on Google, this is going to be the page that comes up here. Let's make this full screen. All right. So the Dow Jones Industrial Average is pretty much just the Dow. That's what people call it. But it is a stock market index that shows how 30 large publicly owned based companies in the United States have traded during the standard trading session in the stock market. So pretty much what that means is there are 30 companies altogether. A lot of them are very, very large companies like Microsoft, Apple, Google, stuff like that. So they take all of those and they pretty much just combined it into the Dow Jones. So what that does, let's look at here because it looks like ExxonMobil and Microsoft. So if let's say ExxonMobil is down 4%, but Microsoft is up 5%, then the Dow Jones is going to be up only 1%, if that makes sense. So it pretty much just averages out all the 30 companies that are in it. Now, this thing has been around for a very, very long time, so I just looked up a chart. I wanted to see how long. Okay, so as you guys can see, it's been around since like the 1920s, in that range. And so why is it falling right now? Okay, so as you guys can see, we had, all the way from 1920, we had a pump and then a dump. Pump, dump. That's pretty much just saying when the stock goes up, when the stock goes down, or, the index. So this thing's just been on a steady increase over the past, 100 years. The trend line is always up. Now, this is where many people often will put their retirement into some of these companies in the Dow Jones, or they will put it in something like SPY, which is the S&P 500. So it takes the top 500 companies. Little different, but this is just little bits and pieces. So you'll have like half a share of, Microsoft, half a share of Google, something like that. But while the Dow Jones is just the total price, so for 24,000, 481.24 cents. So that's the combined total of all of the 30 companies. But all right, so many people will often put this. They will invest into the Dow or the S&P as kind of a retirement type deal. So over the years it builds up, compounds on itself, and makes a ton of money. But all right, so let's look at it over the past 5 days. So really, the Dow Jones hasn't had this big of a fall in a very, very long time. It used to drop 800 points. That's what it was at early this morning when it fell. It was in this range. Right when it opened, it actually fell. But all right, so let's see. But anyways, so let's look at it over the past 5 days. So as you guys can see, it doesn't fluctuate too much, but over the past day to 2 days, we just had a huge sell-off in the market. Now, is that normal? Yes, it's normal. It's really not that big of a deal for markets to have a setback. Yes, we still have, if you look very close, we do have an upward trend line, which is good. That's at the 6 month. The 1 year, this one's going to be a little more consolidated because I remember last January we had a sell-off. Now, this year was just pretty much a consolidation year. That's normal. So next year, maybe we will have some type of sell-off because let's pull up to max. All right. So as you guys can see, we have every time we've been overextended, we had a sell-off. Now look at this huge bull market we've had over the past 10 years with very little setback. We did have a little setback of January, February of this year, like I was saying. But other than that, it really has not been too bad. Now, do I see the stock market just completely shutting down and going back down to 15 or 17,000. Maybe not that much, but I think this very well could possibly hit 20 or 19, just because, just looking at the patterns, this was at 13, and then it dropped all the way to 7. So that's almost half of what it fell. So now do I see it dropping all the way down to, something ridiculous like 12,000? No, because it's so overextended. Many investors and traders will definitely start hopping in and actively trading again once things get cheaper, because a lot of people actually look for a downturn in the market just because it's pretty much just a discount sale on stocks. Every time Apple falls, I buy it. Why do I do that? Apple, what, Carter? Well, retirement, guys. I do that just because I wanted to see if I could put it in here. But why do I do that? It's just for pretty much retirement, everybody. It's not like I'm looking to turn a huge profit on it. Yeah, I figured that. But I think that these companies very, very well could turn around and have another comeback. Let's pull up Apple on here. So let's go. It's AAPL is the ticker name. All right, so it's down 3%. So past 5 days, I bought 77. I bought at 81. So now, am I going to buy at 71? You bet ya I am. I am going to buy some more shares just because Apple is just such a large company out there, and this stock very well could hit 230 within the next 2 years. So if I keep buying a stock a week, even just one share, 2 shares, if I'm buying a stock a week of Apple over the course of a year, let's do it on here. So let's say Apple is 171 and I buy a stock a week. So I buy one. All right, and there are 52 weeks in a year. So that turns into $8,000, everybody. That turns into $8,000. And now that very, very well could be something that I can use as a retirement. This money could be something for trading. And this is if it just stays the same. Imagine if it went up to 230 again. So let's go 230 times 52. 11,000. So I make $4,000 off just a really simple investment of buying a stock at its dips. And Apple is such a large company, and this stock very well could continue to fall and maybe hit. Let's pull up the year to date. Let's see. So this stock very well could pop all the way down to 165, but pretty much there's so many heavy buyers that are going to be buying it over 175. Because I know Berkshire Hathaway's buying in every time it dips. Many large companies are, but past 5 years, look at this consistent upward trend here. All right, let's pull up one more before I let you guys go. This is just Visa. So Visa is another, pretty good company. The reason why I haven't yet, but I would invest in this is very simple. They have no debt. They have, similar to Apple, very upward trendy type deal. And Americans are only going to get more dependable on credit cards. So always keep that in mind. You got to look to see, where you see everybody at in a couple of years here. But yeah, so that's it though. I hope you guys enjoyed this video. Please try to like, subscribe, comment if you are new. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week. Take care, everyone.